What if I told you that you could invest like Warren Buffett, but without waiting 60 years to see those insane results? What if I told you that right now in Europe there is an opportunity that 99% of investors are completely missing? They called me crazy when I said I wanted to generate 90% plus passive income from my investment. They said it couldn't be done. They said it was too risky. But here I am, sitting on a portfolio that pays me daily income while most investors are begging for their quarterly dividends. Imagine waking up every single morning to see your account balance has increased, not just once a quarter, not just once a month, every single day. Welcome to Psycho Investor. Today we're talking about something that combines two of the most powerful wealth building forces on the planet: compound interest and sustainable energy. We're looking at how to generate Warren Buffett level returns 90% plus annually while investing in the future of our planet. Look at my screen right now. This is my actual dashboard showing a 19.14% net annual return. Not theoretical, not backtested, real money hitting my account every single day. For those thinking I'm just another YouTube finance guru making wild claims, every strategy I share is based on my own portfolio and real results. Let me show you exactly how this works and why this might be the most psycho opportunity in Europe right now. Let's start with something that will absolutely blow your mind. Look at these numbers from Warren Buffett's 2024 letter to shareholders. From 1964 to 2024, Berkshire Hathaway delivered a mind-boggling 5,500,000% return. That's not a typo. 5 million %. Meanwhile, S&P 500 returned around 39,000. Here's something even more insane. If Berkshire dropped 99% in value today, it would still have outperformed the S&P 500 since 1964. That's the difference between Berkshire's 19.9% average annual return and the S&P's 10.4%. Just 9.5% difference in annual returns compounded over decades created a 140 times outperformance. Now, what if I told you that you can access similar returns, 90% plus annually, without being Warren Buffett, without picking stocks, without waiting 60 years? That's exactly what we are going to dive into today. The power of daily compounding in the sustainable energy sector. Let me show you the math. If you invested 10,000 at 19.14% annual return with daily compounding, after 1 year, you'd have 12,113 euros. After 5 years, you would have over 24,000 euros. After 10 years, you would have 57.8 thousand euros. And after 20 years, you would have over 330,000 euros. This isn't some fantasy. This is the reality of compounding at these rates. And that's without adding single euro to your initial investment. Now, let's talk about why this opportunity exists in the first place. Europe is leading the global transition to renewable energy, and the numbers are staggering. In 2023, renewable energy accounted for 24.5% of the European Union's gross final energy consumption. The European Union has set a target of 42.5% renewable energy by 2030, which means we're looking at massive growth in this sector over the next decade. Solar capacity alone increased by 61 gigawatts in 2023. That's 50% growth in a single year. The European Union is projected to add 401 gigawatt of solar by 2028, more than doubling its current capacity. This isn't just some government fantasy. The economics make sense. Renewable energy has become the cheapest form of new electricity generation in most of Europe. The cost of solar has dropped by 90% in the past decade. Wind energy costs have fallen by 70%. All of this explosive growth requires financing, massive amounts of capital. We're talking about trillions of euros needed to fund this transition, and this is exactly where our opportunity lies. Traditional banks are slow, bureaucratic, and often unwilling to finance innovative projects. They are stuck in the past looking at fossil fuel metrics to evaluate renewable energy projects. This creates a financing gap, and that gap is being filled by alternative financing platforms that connect investors directly with renewable energy projects. This is where we can get those Warren Buffett level returns by cutting out the middleman and providing direct funding to carefully selected projects. Now let's get into the specifics of how we can tap into this opportunity. I'm going to show you exactly how I'm generating 19.14% returns with daily compounding through European renewable energy projects. But before I do, I need to make something crystal clear. This is not a regulated investment platform. We are not buying stocks or bonds or mutual funds. We are lending money directly to businesses developing renewable energy projects. This means higher returns, but also different risks that you need to understand. Let me show you the strategy I'm using through Ventus Energy Group, a renewable energy project developer in the Baltic states. The approach is beautifully simple here. They develop renewable energy projects, solar parks, biomass plants, etc. These projects need financing during development and construction phases. So they offer two types of loans: senior loans starting from 6% annually, mezzanine loans reaching 20% or more annually. The key advantages that make this cycle level yield possible: direct lending without intermediaries, interest capitalization feature, which is daily compounding, and early exit options if you need liquidity. Also, complete ownership and management by Ventus Energy. The result? A consistent 19.14% return that hits my account every single day. Now let's talk about why Europe specifically offers such an incredible opportunity in this space. Well, Europe is years ahead of the rest of the world in renewable energy adoption. Sweden already gets nearly 2/3 of its energy from renewable sources. Finland is at 47.9%, Latvia at 43.3%, and Denmark at 41.6%. So the European Union has established innovative financing mechanisms specifically designed to accelerate renewable energy development across borders. The first cross-border tender in 2023 saw Luxembourg funding solar project in Finland. The second tender allocated 52 million to 9 renewable projects in Finland and Estonia. These aren't just government initiatives. Private investment in European renewables hit record levels in 2023. Energy storage capacity more than doubled, with 10 gigawatts installed in a single year. The Baltic states, where Ventus Energy operates, are positioned perfectly to capitalize on this growth. They have ambitious renewable targets, favorable regulations, and a strategic location connecting Northern and Eastern European energy markets. This combination of policy support, technological advancement, and economic incentives creates the perfect environment for high-yield renewable energy investments. Now, let's address the elephant in the room: risk. Anytime you are targeting returns this high, you need to understand and manage the risks involved. First, there are loans to private companies, not regulated financial instruments. If a project fails or the company faces financial difficulties, there is a risk of losing your principal. That's why I emphasize diversification across multiple assets and keeping this only as a portion of overall portfolio. Second, there is regulatory risk. The renewable energy landscape is evolving rapidly, and changes in government policies or incentives could impact project profitability. This is mitigated somewhat by European Union's strong commitment to renewable energy targets, but it's still a factor to consider. Third, there is liquidity risk. While Ventus offers early exit options, they are not as liquid as publicly traded securities. You should only invest money you won't need immediate access to. But here's the psycho-investor perspective on risk. Every investment carries a risk. The question is whether you are being properly compensated for the risk you're taking. With traditional investments yielding up to 5% while inflation runs higher, you are taking risks and losing purchasing power. With this strategy, you are taking calculated risk with the potential for returns that can outpace inflation by 10 to 12% or more. Remember Warren Buffett's performance we discussed earlier? The difference between good and extraordinary results isn't about eliminating risk. It's about understanding risk and being properly compensated for it. So, what's the bottom line? We've seen that a 90% plus annual return compounded over time can create extraordinary wealth. Europe's renewable energy sector is experiencing explosive growth. Directly linked to renewable projects can generate these returns with daily compounding, and proper risk management is essential but achievable. Let's be honest, this strategy isn't for everyone. If you're looking for conventional 4-5% returns and perfectly liquid investments, this isn't for you. But if you are ready to think differently about income generation and wealth building, this could be the alternative strategy that transforms your financial future. If you want to learn more about psycho investing, hit that subscribe button and smash the notification bell. You'll find the link to Ventus Energy in the description below. Until then, keep it psycho, keep it profitable, and remember, they called Warren Buffett crazy too, until he outperformed everyone else by 140x. This is Psycho Investing, signing off.